Good morning, good afternoon, good evening, one and all. Welcome to another fun-filled, exciting edition of the Smoking Barrel. I'm Rustin Edwards, based in frigid Geneva, with my illustrious co-host, Mr. Matt Stanley, in hot tropical Dubai.
Yeah, yeah, I'm not going to lie, it is. And morning, everyone. And I genuinely have anxiety about how cold it's going to be in England next week when I'm there. It's keeping me up. I've got two gilets, because that's all people in the old trading market are, with just big cuddly teddy bears and gilets. Um, but I don't think it's enough. I'm more worried about. It sounds mad, this, and I've started off going mad. I'm worried about my ears. I don't know what it is. The older I'm getting, the more I worry about my ears getting cold.
That's probably because you shave your ears down, like I do now.
I think it's because I've been married so long that I just end up walking around the house like this, so I don't have to listen to anything. So they're always hot. God alive, if she sees this, I am in a world.
Miss Stanley, that's his opinion, not
No,
mine.
she's
You're a
out
lovely lady.
shopping.
You're a saint. You're a saint.
She's just shopping. Leave it be. She's a subscriber. Thanks, love. Love you too. Anyway, before I get cancelled and divorced, um, geez, where are we? 4th of February, 11:53, Gulf Standard Time. There hasn't been a headline for about an hour. It's a bit worrying.
Well, we got crude there at 67.46, backwardation pretty strong on the whole forward curve for Brent, as I think the market is generally risk on and geopolitical risk on. So we've got a relatively hot pot boiling right now.
Well, it's like the hokey cokey, isn't it? Because if we, let's just share, let me share where flat price is trading so you can see. I mean, here we are. You can see this, all right? Yeah.
Yeah.
We just had someone just hit a button accidentally, it seems like, because Brent went down to 67.06, but a slow grind down, it seems, today. We're still up on the day, up 14 cents. Two things I want to talk about. Yes, risk on, risk off. It's like being in the Karate Kid, isn't it? And where do we start the year? 59.75 we dropped down to on a second trading day of the year. Second wasn't really a day because everyone was hungover and it was a Friday. Monday started with 59.75 we went down to. And then we popped up 71.89 at the end of January. And then we kind of come off again. We went down to 65.19 yesterday, and now we're at 67.5. Yes, risk on, risk off, but it seems to be floor and ceiling is pretty well established. I think 60 is well supported, and I don't think 70 there's much resistance, but I think that it's a bit too rich for people to get involved in. I think the
Well,
market just
you need to have
likes.
something definitely to push the market over 70. I mean, I would say, yeah, we're definitely solidly within a 60, 70 band because
Yeah,
when you get close to $60, you've got buying interest that comes in because everybody's going to expect OPEC to do something.
yeah.
And then when you get up to 70, it's a bit of, as you said, a bit rich for my blood. Let me take my money and see if I can reset at a lower level.
That's a good point, actually, because whilst we'll talk about all the other shit that's going on and what is happening and threats and Abraham Lincoln's pesky Abraham Lincoln's arriving in an island not far from where am now. But let's talk about that in a minute. Um, I think people then forget that there are still the other factors that are going on in the market, like OPEC. And I wonder if the overarching factor is, okay, there's lots going on. 65, I'll kind of flirt around there while all this geopolitics is going on. 60 is the floor for OPEC, but at 70, do they bring more oil back? Is that the catalyst for the ceiling?
Well, yeah, that's probably the other reason why this, if you start trending above 70, you might see a bit more oil come back because why not make a little extra money when crude prices move up?
Yeah,
Um, everybody's got to remember that, the amount of barrels controlled by OPEC is getting lower every year, not higher. So yes, OPEC's still roughly 28% of the global market when it comes to supply. But when you have a place like Guyana, which is now almost a million barrels a day of production,
yeah,
um, I mean, that's a huge shift in balances as to where non-OPEC barrels are coming from. And
yeah.
now Venezuela, OPEC member, but pretty much under, let's say, U.S. control at the moment. Can they do more and put more out in the marketplace against any type of quota? And I don't, and if I recall Venezuela is not part of any quota scheme at the moment.
Correct. Correct. But before we get onto all things Venezuela and in the weeds, and I want to talk about some US oil production in a minute, I just want to mention something we discussed on WhatsApp. We speak every minute, more or less, on WhatsApp. June set Brent, I like that trade. So here's the structure. You can see here, okay, we're pretty, mid to high 60s. The market likes it there. TI likes being comfortably above 60, and gas oil has done remarkably well. Gas oil prices actually in Europe have stayed about the same compared to this time last year, whereas Brent's actually down about $10 a barrel. So cracks, refining margins are still performing pretty well. But it's this trade here. Now, there's a few things to discuss. When I spoke to you, I said I like that roll down trade. Can you just explain to the lovely viewers and subscribers, like, comment, subscribe, what a roll down trade is, Rustin?
Well, it's basically where you have a position that's down the curve that you think is going to get stronger as the curve rolls down. So currently we're trading April Brent. April Brent will go off the board at the end of February. Then you'll have May Brent trading actively in the front month. And
Yeah,
so it's a trade that you put on in anticipation that the back end of the curve will perform as the front end of the curve, looking for value for an entry point.
yeah, yeah, that's spot on. So couldn't have said it better myself. So if we're talking about June set, we've got June, July. June, July is trading here. So that's 43 cents. Then you add on, because you're trading the June set spread, July Augie. So that's 37 cents. That's 80 cents in total. And then you got Aug Sep as well. Add that on, that's 31 cents. That's $1.11. You're buying June, you're selling September. That's the spread. Now, people like that trade because it's at the end of each quarter. So it's NQ2, NQ3, right? Essentially. And people like, they call that the posts. It gives them a sort of setup. They can roll it down into Q4. So you can do SEP for example. But what's happening is about, before we get all technical and lose everyone, with all respect, this front spread here has been around this number. In fact, at the back end of the month, this goes bid. I think March, April, when March was a front month, I closed about $1.10
Yeah.
backward.
Yes, it
And
did.
why this is a good bet here, June SEP, is because seasonally Europe is in deficit during that time. So there's always a sort of supply and demand number. Spreads go bid because the front of the curve becomes really tight. So I like that trade anyway. But where this sits, if you do $1.11, divide that by three, that gives you an average of about 40 cents, roughly, with 38 cents, let's say, um, against each of these spreads. And I think if that goes up here, when I said that to you on Monday, what day is it today? Wednesday. When I said that to you on Monday, it was trading at 94 cents, that spread. And it went up to $1.15 this morning. So this is what I'm watching. I think June SEP, I think this spread here, $1.11 it's trading now. I think that this $1.12, I think that that goes out to, I think it could go out to $2.
Now, one thing to remember, these are our opinions. We're not here to give trade advice or any other disclaimer about performance in markets. However, the one thing that if you're looking at structure on the curve, because that's basically how traders trade geopolitical risk is through structure.
Mm,
And with the increase in backwardation, especially in the front half of the curve, putting on a long structure position is probably your best insurance in case there is a incident where missiles go flying in the Middle East,
yes.
because that will inevitably rally up to a point where you could see $2 of backwardation erupt rather quickly. Because when you start thinking of the Middle East, you start thinking Straits of Hormuz. Straits of Hormuz, you're thinking anywhere between 6 to 7 million barrels a day of crude exports under the gun, as
Yeah.
well as natural gas exports. And so it could really cause a rapid move upwards, and give you an opportunity to make a few shekels.
Yes, exactly. I'd use a different currency if I were you, but yeah, I totally agree. On that caveat that do not trade against our wishes. If we had recorded on Monday and I said you should buy June SEP, you would have made money. Okay, but don't do it now and then sue me when it loses money, which it might do. Anyway, look, I think that's where are we now? We're in an environment where geopolitics is still rife. We'll talk about all that in a minute, but I do like that June SEP trade. I've always liked June SEP, but I think that that is a fair. Okay, well, here's a question. Would you buy gas or cracks here?
Well, it's a very interesting question because, gas oil cracks in the front, we are in the tail end of winter. February is typically your coldest month, but you also have the start of refinery turnarounds that start kicking off here in February as well. So you always end
Yeah,
up with a bit of a shortfall. Now, you couple that with the implementation of the 18th round of sanctions from the EU, which bans product from a refinery running Russian crude for those products to come into the EU.
yeah,
That does set up a position that being long front end cracks on gas oil would not be a bad risk on trade to have. Just because you lose that, incremental flow coming in from other countries such as Turkey or India that are running Russian crude
yeah.
and can't comply with the new EU regulations.
Do you know, that's a really good point because I fear that I've been ignorant again because I use gas oil cracks, the gas oil refining margins essentially, as a sort of bellwether for how the barrel is performing, right? So, okay, crude is here, but how is the actual refined barrel? I use gas oil as the sort of proxy for that. But I'm ignoring gasoline. I think gasoline has started the year very strong in Northwest Europe, primarily because the Dangote refinery is pulling in so many barrels because they're down for maintenance. There's a problem. They've only got one distillation column. That's down. It's been down for a while, a lot longer than people acknowledge, perhaps. And I think gasoline has performed very well. But gas oil is sort of moved now from, okay, demand has suddenly popped up somewhere, so gas oil suddenly got a load of strength. Because of the Russian issue, gas oil has been the um, sort of case study barrel. Would you agree that if you're sort of buying
Well,
gas oil cracks, you're buying Russian geopolitics?
you're buying geopolitics that there's going to be tightness due to the lack of the Russian flow because Russia was and is and was a major exporter of gas oil. Europe was the main market for that gas oil. Now, when Russian crude shifted to Turkey and Indian refineries,
Yeah.
that gas oil export started coming from Turkey and India. Now that that's been blocked with the EU sanctions, it basically opens up. You have to look at transatlantic flows now as the main source of Argentine barrels as well as barrels out of the Middle East. Uh,
Yes.
so all of your like ADNOC refineries, your Saudi Arabian refineries. Now, the one thing about the Middle East, I believe that Jazan and Rustin have two large turnaround programs scheduled coming up, which should tighten outflows out of the Middle East. So it does put a structural upward bias on gas oil into Europe.
Yeah, I agree. I mean, this is written by my colleague George. I think this came out on Monday. Yeah. Russian gas oil resurgent floods Brazil, but offers little respite for the Med. Um, and this is the thing, isn't it? Is oil everywhere, but not a drop to buy because you can't buy it. And
Well,
it's,
and that's part of and that's part of the let's say some of the overall outright bullishness in the marketplace. Plenty of molecules, not commercially tradable.
yeah, exactly. And I think that, you know what no one's talked about recently is the glut. Where's the glut? Q1. It's going to be all this oil and it's going to, people have actually, we've revised down our S&D balances quite substantially, primarily because of the CPC issue, the explosions in the Black Sea. But George is right. This is a really interesting one because we've done remarkably well to talk for 10 minutes and not mention Donald Trump. So, before we talk about Donald Trump, let's just talk about what's going to happen here with this Russian gas oil. So, if we go into flows here, this is an interesting one. I haven't looked at this for a while. Let's go into Brazil. So, this is our cargo flows from Kepler. Brazil, let's look at gas oil and diesel imports, and let's look at origin countries. Let's look at that over the last 2 years. Right. Here's what the Russian share uh, dropped off substantially Q4. Now, there's a few bits to pick out here. One, let's look at this in. Do you want it in what unit would you like? KBD, KT? What would you
Let's put it
prefer?
in KT. Let's talk
Oh,
international.
good old thousand tonnage. Right. January 2026. So last month, Brazil imported 1.7 million tons of diesel. That's quite a lot. Um, of which 100 KT came from Saudi, 200 came from the US, sorry, UAE, 560 came. 800,000 tons came from Russia. Now, Q4, it was substantially lower. In fact, compared to November, Brazil bought 4 times as much gas oil from Russia than they did in November. That's a lot of oil. Here's the question for you. Does this put Brazil in the spotlight for being the next, and I hate using it as a verb, but the next tariffed country because of their seeming reliance on Russian gas oil?
Well, they could be put into the spotlight. However, you got to remember there are a couple of things from the current U.S. administration about what they want to have. They don't want to have oil markets going to $100 a barrel. And so for them to fully go after each and every country that is taking in Russian oil, which would be the right thing to do if you want to put the economic vice on Russia to stop their aggression in Ukraine.
Yeah,
You put full 100% pressure on all Russian exports to all countries around the world. Now, there is a note that Trump has threatened any country that takes Russian oil will feel the wrath of tariffs. He has said that.
yeah,
Not in those words, but that's just me paraphrasing.
yeah.
So Brazil does become a natural dumping ground for Russian gas oil. And when you think of trade flows and how trade flows would switch around, well, if the Russian gas oil goes into Brazil, Brazil backs out US gas oil, which I think if you look at that flows, that's what has happened.
Yeah.
And the US goes to Europe.
Okay, well, look, here's the thing. So we're going to talk about in a moment. We saw the Donald and President Modi of India get together and agree that he would buy a lot of that India would buy a lot of US energy. They'll stop buying Russian. We'll talk about that in a minute. And then there'll be half the tariff. So it went from 35% to 18%. So that's the new tariff that's agreed. If you look at, but
Well, and you got to think
if
Brazil is currently under a 50% tariff regime right now with the US.
50, 50,
50.
right. And if you look at US flow here, but what I'm saying is, we're on the Indian discussion. I know we'll touch on that in a minute. On the Indian discussion, is it not all come down to the fact that Donald's got what he wanted because India are just going to buy more stuff that the US manufactures? Isn't that the driving factor that he wants?
You would think so, but when you look at the scale of Indian trade to the United States, it's not that big.
No, but they're the third biggest importer of oil in the world.
Yeah, oil, yes, but not manufactured goods.
Okay, is
And and you got
hang on,
and the
hang on.
deal with Venezuela with India has more to do with Venezuelan flows than with U.S. flows,
Okay,
because the
forget.
Indian refineries are not built to run a large slate of U.S. light sweet crudes. They are built to run heavier sour crudes.
Right, fine. But, okay, but like Cold Lake Blend or something like that, stuff
That's
that's going through.
Canadian. That's not American.
Okay, but if okay, fine. But if manufacture's the wrong word, anything that comes from the US, be it products as well. I know they've got a big refining network. Then anything that's made in the U, any goods that are made in the US, that could be crude oil that comes out of the ground. That's maybe they can buy. Um,
But they won't buy crude oil. They don't run that crude. They don't run light sweet crudes.
okay, let's have a look while we're on this argument.
I mean, it's like basically what does India get? Okay, India gets more access to the U.S. market under a lower import tariff. That's about the best thing India gets.
Okay,
The
okay.
United
Now what?
States gets very little out of this trade back into India.
Right. I mean, look, what I've done is I've gone through the last 5 years because um, it's a good highlight because it's 2022, so it's 4 years nearly since Russia carried out the special military operation. So India here, let's do KBD rather than KT because that's what people. This is crude and condensate. So the 3 month average is around 5 million barrels a day. Say rough, no, yeah, 5 million barrels a day. Where is that coming from? If you look here, before the special military operation, not much crude was going into India from Russia. How much was coming from the States?
Nothing. A
Well,
few 100,000 barrels a day.
Okay, is that nothing?
300,000 barrels a day.
But okay, so 570 it was in October because obviously, and that was quite a big month. India exports in February. These are predictive. That's a lot of oil. Only 250 coming from the States. Okay, all right, fine. But when you're talking about, and going back, we'll go on to India in a minute. But when you're talking about Brazil, what I just mentioned there, then buying, I'm just looking at the next country that will, because it does seem like he's sort of going around certain areas at certain times, and then sort of, sharpening the arrows, if you like. Brazil seemed like they could be next on the radar for a serious possible sanction if they keep on buying Russian gas oil.
They could be. It really depends on how much gas oil can flow into Brazil. I mean, yes, they flew a lot in already. Um, but nevertheless, I mean, it's a balancing act that has to be done because if you start trying to squeeze Russian product out of the market all over the place, it will find a way to flow. It may go through some machinations to recreate the origin of the oil. So it comes from a different country, not Russia, which has been happening since the whole invasion happened. People finding places to re-BL ships and moving cargoes in.
Yeah.
So, and if you don't want to have that delicate balance break, because as soon as you start putting that type of heavy pressure on one end of the scale, it's going to cause prices to go up and it's going to impact your domestic economy because your retail gasoline prices will go up, retail diesel prices will go up.
Yeah, inflation. God, talking about real economic words here. Look, I just want to show you something to put it into context. So, two things. Here's our opinion around what the India-US trade deal means. Um, we still think that. Well, here you go. The India-US trade deal announced on the 2nd of Feb is unlikely to trigger a near-term reduction in India's Russian crude imports. Now, what does that? Why? What does that mean? Okay, if we
Well,
look at this.
that's just basically your trade flow. I mean, if you tell someone today, stop doing this action, well, every refinery is running 6 to 8 weeks ahead of what they're actually running. And so they've already bought their supply for a certain time period. And
Right.
conversely, if this is a Venezuelan crude flow into India swapping out, it takes time for those cargoes from Venezuela to make their way into India. I mean, it is a roughly a 48-day trip, I believe, from Venezuela into Jangmanyar.
Yeah.
So you can't just flip a switch and say, okay, we're no longer doing this, we're doing this now. They
No,
do
no,
it.
exactly.
And
But,
so
but
it will be April, I think, is the earliest you'll see if there's any real switch in the diet.
yeah, look, I mean, if you look at say where things are landing, so this is our arbitrage calculator. So that was a shameless plug, and I don't care. Honestly, I don't care. So here's where this is a landing value for delivery into West Coast India, which is Jamnagar as the port of medium sour crudes. And it lists all the sour crudes that we cover, which you can see here are these. Lots of them. And it gives you a chart, it brings up a chart on what that is worth. So if you go down to the bottom here, Mostarda, which is an Angolan grade, delivered in April versus a Dubai benchmark, right, is lands at plus 770 from Angola. That's medium sour. If you go up here, a barrel of Urals on what size is that? Suezmax. So if you look at Suezmax here, minus 20. That's a 28 buck diff. Look at all the others. The next cheapest barrel is a Saudi Arab heavy, right? That's a $20 delta. Now, when we're talking here about what my colleague Naveen and Sumit are talking about, and they put it a lot more tactfully than I can, um, remain economically critical for complex Indian refiners. No shit, Sherlock, right? 20 million, $20 a barrel on what 130 on what 900,000 barrels of crude. That is a lot of money. A lot of money. And
No,
this is where
that's a lot of GDP growth India is willing to give up.
right. And look, they've come out and said we think our economy is going to grow by 7% this year. I think that's more or less I think that's nearly double what China has said.
Well, India growing by 7%, I think a lot of that does based on them getting cheap energy in. because that's been basically the saving grace of the Indian economy for the last 3 or 4 years. The fact they have access to all this cheap energy from Russia, which has been driving their economy forward. I mean, you look at all their manufacturing data and everything else, and they're doing gangbusters because they've got the cheap energy base.
Yeah, exactly. I mean, look, you've got 4 million barrels a day. This is refineries in West Coast India, and I've split this by what crudes those refineries are running. So I think in total in West Coast India there are set 12 refineries. They're all listed here. I'll gloss over that for a moment. Still, in February, 786,000 barrels a day of crude is coming from Russia, right? What does Donald expect? That this is going to go? That this is
Well,
all it's going to be replaced by Midland? Or I, it just fascinates me.
but
Like what?
but as I said earlier, it's not that if you go back to that crude diet, their crude diet is a heavy sour diet. That is what the refineries were built to run. That's what they're going to take. They're not going to run 800,000 barrels a day of light sweet crude.
So the split there, the Arab. So let's go Arab Basra heavy, which is like a Meray crude, right?
Yep.
And then you've got the Mumbai High, but that's the local Indian. You've got and then others. I'm not sure what they are. There'll be a split of. I'll have to
Well,
look at what
and
the
those
name.
others could be Russian crude as well, just not being BL directly from Russia.
Yeah, I'd imagine that that's like going to the flows, but
Could be Iranian, that
you,
other.
right, Urals as a medium sour though, on a like for like, that would need replacing. And if you look at what the ARB calculator says, if I go into my bookmarks, the next cheapest barrel is anything out of the AG really, or Middle
Yep.
East Gulf. And that's $20 a barrel higher. That immediately means that refinery loses that $20 a barrel crack optimization, right?
Yep.
Ouch.
Which drops into the bottom line of the entire economy of India.
So I mean, this hasn't really been discussed. When this came out with, he's a great friend and Donald Trump and like I love Modi and blah blah blah. Does the market think that India are not going to buy Russian energy anymore? Is that kind of did he say you're not gonna buy that anymore? That is a term of this deal.
To be honest, I would need to actually see what the because I think the details of whatever deal they've made are not forthcoming.
Right, because it just seemed and this is it, right? And we're here to try and put some context around lots of different things. I didn't all I heard was some soppy posts that we love India, tariffs have gone down to 18%, they're going to buy loads of stuff from the US. I didn't really hear that what they're not going to do though. And that's quite important, isn't it?
Well, it is because again, there is the front end of the president of the United States trying to make himself look at me. I'm such a great deal maker. Look at all these deals I've made. Look at me. Look at me. Look at me. But then there's the reality of it is, yeah, you're going to give up, as we just pointed out, a $20 premium or a discount on what you're currently running, which is driving your economy to appease a country that you do very little trade with to begin with, or they're marginal trade partners to begin with.
Right.
So unless there's other sweeteners in this pot that we aren't aware of,
I think it's one to watch. I really do because I think that conversation is just starting. India, US. Anyway, let's talk about the next sanctioned country. Next sanction, Venezuela. Um, let's have a look at this. So we shared. There's a few articles. We've actually got what's called a special section in focus about what's happened in US Venezuela section.
well, Venezuela's
Um,
been, ever since the seizure of Maduro, which happened a month ago, only a month ago.
I know. Jesus. Is that
Feels
right?
like it happened a year ago, but it's only been a month ago. The United States has been reducing the sanctions against the Venezuelan regime. There's been a couple of general licenses that have been issued by OFAC. There was one done last night, which now allows for the trading of diluent into Venezuela.
Mhm.
And then the one prior to that was the trading of Venezuelan petroleum out of Venezuela. Now, the key caveat to both of these is the fact that they explicitly specify that the trading must be done by a U.S. entity. So
Right.
the diluent has to be sourced from a U.S. refinery or U.S. origin, and the fuel oil, crude oil, and everything else has to be traded from a U.S. entity. It has to go primarily to the U.S. market, but it can go to other markets with approval.
So, okay, let's talk about that just quick before we wrap up. First, Venezuela high sulfur cargo since Maduro capture, so a month. The Sea Wish. Let's go into this. So, it's on its way to Rotterdam. Where is the boat now? Hang on. The Sea Wish, there she is. So she loaded here, Venezuela. She was at Anchorage, and now she's on her way to Rotterdam, ETA, Valentine's Day. Um,
Oh, what a gift.
90 kT. And we spoke about this before we came on air. ULSD, this boat was a previous clean vessel. So the clean to dirty switch is happening to load high sulfur. That pushes freight up on the Aframaxes, in my view. But and what happens to LR1s? But um, this is on its way to Rotterdam. VTOL of the charterers. This is all public knowledge. I'm not giving anything proprietary away here. Are you telling me that in order to depart to go to Europe, this had to be approved by the US government?
Yes.
Okay.
Now, a lot of this could have been approved well beforehand, because it's well known that Venezuela is sitting on a very large stock of fuel oil as well as crude oil.
Yeah.
Um, and so to get those barrels moving and get cash back in, you're going to have to issue licenses and make it happen. So, you got to think that with the speed that the VTOL Trafigura and the like have been given licenses to do business in Venezuela, that there's already been some pre-planning and pre-filing to get things lined up so that as soon as the general license is issued, boom, here we go, we're ready to go.
Interesting. I wonder because
Well, because that other cargo, the other ship that you're pointing out, is sitting off St. Eustatius,
yes, the Morning
which is a
Star.
big fuel oil blend hub that VTOL and Trafigura both operate out of.
Yes, let me pull that up so you can see.
And St. Eustatia is, just so everybody knows, is an island in the middle of the Caribbean, which has been the home for a small little refinery topping plant as well as a storage facility since the 1950s, 1960s.
Hang on, this is interesting. One thing on this. So we've actually got this as a red flag. So this is a sanctioned vessel. You can see high risk here. What's the problem? This vessel has transported sanctioned cargo since the 1st of Jan. Controller is the Vens. Are we saying that this morning, let's say that this is a sanctioned vessel under OFAC, which it is, it would be
Hmm.
because it comes under the. Are we saying that Traffy or VTOL or whoever it might be loading this are allowed to use this vessel because OFAC approve it?
Well, is it a case that it was chartered by Traffier VTOL, or has PDVSA shifted it to St. Eustatia to dispose of the cargo? And that's being allowed under the OFAC license.
But who would be operating this vessel now?
It could be a Venezuela owned and operated. It could be a PDVSA owned and operated.
Hmm. I mean, I'm sort of thinking, I'm like, okay, what do I say next? Um,
Well, I mean, the one thing in point is that anything doing with Venezuelan oil flows is now firmly in the hands of the United States, and the current OFAC licenses has given basically, U.S. based traders the catbird seat in order to facilitate that flow.
okay, here's a question for you to wrap up the week. A little controversial. There's been quite the movement of military, navy personnel and equipment and infrastructure moving closer to Iran,
Yeah.
right? What's to stop Donald going into Iran and doing the same thing with Iranian energy flows?
The IRGC.
Oh, Jesus.
Well,
Okay. I'm going to pretend we didn't have this conversation.
I
Um,
mean, it's a case that all right, in Venezuela. how was that able to be happened is that you had definitely an inside deal was done with some people within the Venezuelan government to get rid of Maduro and try to bring things back to a normal operating regime. Maduro had his enemies inside the government. They leveraged them. They got them to cooperate. And that's why the U.S. was able to go in 3 hours later, extract Maduro and his wife, limited casualties, mainly from Maduro's personal guard only. And the entire air defense system for Venezuela was shut down for 3 hours. So, in order for that to be in Iran, you need to have a similar type of deal with somebody who is in the high echelon of power, who basically gives a stand down order to allow the seizure of Khomeini and some other people out of that country.
I feel like you're reading me a screenplay of something you've written and you want investment for it. That's what I feel like.
Hey, you don't have to be who's the guy who did the Hunt for Red October?
I mean,
Clive Cluster? No, he was the treasure hunter. Um,
it's what you just said there is unbelievable. Like leveraging people who didn't like Maduro, extracting him and his wife, taking them to New York, limited casualties. I'm not laughing. It's not funny, but
Well, it was the cleanest operation in a while that's been carried out by a opposing force.
yeah.
And
And
now, when you think of Iran's a much different animal because I think you have far more fanatical alignment with the leadership as well as the IRGC, that it'd be very tough to execute a similar type of action. Now, I think the risk that everybody has is that, say, if there is a elimination of the current Iranian regime by the U.S. attacking Iran, and we have a limited war. It goes on for 10 to 15 days. Let's just call it like that. There is a very high risk that once that's done and you've stabilized the area, um, oil markets collapse to 50, $55 because the difference between Venezuela and Iran is Iran's oil infrastructure is fairly much intact
yeah, and it's quite,
and it's quite robust.
it's
And
quite
you,
robust, quite Carg Island. I mean, if you just last one to go on the old Kepler, I feel like I've dominated it today. I should pay for my own subscription, even though I work for them. You go into a location like Carg Island. This is obviously within the Persian Gulf or Middle East Gulf. I'm going to get in trouble. Here's Carg Island. So this is Iran up here. Iran, sorry. Um, you got Bashir down here. You got BIK up here. This is Iraq. There's Kuwait. There's me. Hang on. There I am. Kui, hi. Straits of Hormuz, Bandar Abbas, etc., etc. But Carg Island is a pretty sophisticated place. You'll just zoom in on this so you can see.
well, I mean, but the difference you've had in
Look
Venezuela
at these
to
tanks. Look, one of these, there's 1 million barrels in this tank. These one here, 960,000 barrels. You add all these up.
and that's the difference between what Iran would be and what Venezuela would be, is that Venezuela needs a lot of investment to get above 1.5 million barrels a day.
Yeah, but
Iran
this,
can get to 3 million barrels a day exports to the global market at the flip of a switch.
yeah, because Carg here, look, obviously it's just literally just for oil.
Yeah.
Um, there's the airport, etc. Deep water ports, you can get a VLCC in. All of these are
Yep.
VLCCs that have just loaded. Um, 22 million barrels on Carg.
Yep. And so that would be the difference in the oil markets is that you could see an immediate outflow from Iran, and Iran could just keep pumping if there's a complete change in regime and sanctions are released.
Okay, well, look, on that cheery note,
But
um,
anyway, that goes back to the idea of buying structure on crude because if anything, you'll see a rally in the front and then the back end will sell off as more oil becomes prevalent available in the marketplace.
yeah, let's see where old June Sep is trading. $1.13. So you could have made 2 cents on this call, people. And if you take that in half an hour, there's 8 working hours in a day, 2 cents, you'd have made $1. You've made a lot of money. Okay, you got us to thank. Buy us a beer next week during IP week because I will see you there, Rustin. Right?
That's true. We will be out in the Shepherd's Market and other venues around Mayfair. So looking forward to seeing you all there.
Tuesday
Um,
afternoon, we shall be around said establishment indulging or
Yes.
talking markets.
So click like, comment, and subscribe. Thank you for tuning in, and we look forward to seeing you all next week in beautiful London.
Ciao.